The Nigerian equities market witnessed renewed interest in backing and high dividend yield stocks as full year 2024 results spur investors' momentum. Joshua Chinga, the sales side analyst at EDC Nigeria, joins me now for a market update. Thank you so much for your time today, Joshua. And let's look at the first quarter in perspective here. And I'd like to get your take on how we've seen the market perform so far this quarter. We've seen that in the month of March alone, the market was down about 2%. But let me get your assessment of the entire quarter.
Oh, yes. So you're right to have mentioned that the entire quarter has actually suffered a lot of beating in the market, especially looking at what happened in the Q3, where we saw the market drop down by 2%, despite some strong gains. A lot of interplay was happening within banking sector stocks and the oil and gas sector. Basically, if you look at even the most recent performance of the month, we see that the oil and gas sector was one that took the highest hit of 4.02%, followed by the industrial goods, which you could hit of 3.59%, insurance 2.48%, and all in the negative. But we saw some return to a little bit of recovery in the banking sector, which has also helped assisting in what we are seeing in the markets. And you're right to have said the banking dividend-paying stocks were part of the reasons why we saw a lot of momentum in the banking sector, and that is what we're seeing in the equities market as we speak today.
All right, let's get to how investors are responding to some of the earnings. I'm looking at the results from today. We saw VFD results coming today as well, and we're seeing that the markets are quite reacting quite positively to that result. I'd like you to speak to that and the prospects for companies of that nature in the market here.
Okay, so VFD happens to be one of those companies that fall under the financial service sector. And one thing that the financial service sector has really enjoyed within this period is the interest rate environment, high yield interest rate environment. And speaking to that, we also understand that most of the activities we'll be seeing in the equities market from the banking sector will basically be heavily on stocks that are paying good dividends. I mean, when you compare how Zenith is performing compared to how GT performed in terms of the dividends declared, we can already see in the markets taking a huge reaction to that already. If you see, looking at how investors are already looking at how they can position themselves to take advantage of this dividend payment. Dividend is really going to be the major driver. Beyond that too is also the consideration of the dividend yield compared to what we're seeing in the fixed income market, because that will also be a major sway and determinant to how the market will react in the coming days to going forward. Yeah.
All right, but I'd like to get your assessment of the banking results we've seen so far. We've seen quite a number come out in recent days. Let me get your take on what we're seeing play out and what's if we think you'll see similar sentiments going down the year 2025.
Well, it's a very good question to ask. And one thing that has really helped the performance of the banking sector is the interest rate environment. And like I mentioned, things, in my opinion, may start to change as we're seeing inflation numbers even coming down. There's also the MPC meeting coming up soon too. All of that factored into the expectations of what to see in the equities markets would really, really have a major sway as to what will go on going forward for the banking stocks generally. But the way I see it, from where I sit, the banks would try to take advantage of the by increasing their interest, their borrowings, basically increasing their lendings to customers, and then increasing to see how they can make sure that they improve the quality, their loan quality. And that will also go a long way in determining the profitability of banks. So banks that we see that will be heavily invested in sectors relating to power, oil, energy, we would expect them to be in a better standing compared to others that have limited chances or opportunities in that space.
All right, let me get your take on other players like Boa Foods in the market. Now, we've seen that this company was listed in 2021, and we're seeing that the recent results crossed the 1 trillion naira mark for the first time. And I'd like to get your take on what we're seeing play out there in terms of the revenues that we're seeing from players like that and the prospect they have in the market here in Nigeria.
Yeah, so just even if I got you correctly, you're speaking towards a company like Boa Foods.
Yeah, Boa Foods.
And also Boa Foods specifically. I was thinking more of the Boa Industries, but Boa Foods under the whole the consumer goods segments generally, what I expect to see, and this is my own take on what I've seen in their performances so far, and what to expect going forward is this: we'll see a lot of challenges regarding FX, as in a lot of mitigants in trying to avoid the challenges of FX. That's the first thing I will see play out in that space. And any company that can will do that will go a long way in getting the interest of investors. The second thing I also see play out is the ability of the efficiency of these companies to be able to manage their energy mix, because energy is like almost more than 80% of the input cost of all manufacturing companies, consumer good producing good companies in Nigeria. And unless they can find a way to manage their energy properly, we'll continue to see their margins shrinking. So any company we see doing such in that light would also go a long way in helping. Beyond that too, I also see a lot of expansion in terms of, although capital expenditure may not be as much as it was last year, a lot of companies are trying to take a slow down on this. After listening to a lot of investor calls, analyst calls, these are the kind of sentiments and feelers we're getting from these players. And then lastly, obviously, if they can address the energy mix, the FX challenges, and then look at investing in a better machinery to improve their earnings capacity, that will go a long way in determining the profitability of the consumer goods sector.
All right, thank you so much for your time and analysis on the show today. Joshua Chinga there, the sell-side analyst at EDC Nigeria.